Hi, it's John. Thanks for joining us again today. I'm pleased to be joined by James Posnett. He is a senior manager in charge of listings at ASX, and he's going to tell us all about that. Hi there, James. How are you doing?
Hi, very well. Good to see you, John.
As usually we do, we like to get started on a bit of a personal note. I thought I'd ask you to just tell us more about yourself and your role at ASX.
Yeah, sure. So I work on the business development side at ASX. Our role is really to go out and find listings for the exchange. So we do that in a variety of ways. We go directly to companies, private and companies listed on other exchanges, and pitch to them directly. And we also speak to the ecosystem, the capital markets ecosystem, so bankers, lawyers, and so on, investors, VCs, private equity. So we really have an excuse to speak to pretty much everybody. So it's quite good fun. I've been at ASX for 8 years. And prior to that, I was in London working with New York Stock Exchange and Euronext. And a good chunk of that was also on the listing side. So it's quite interesting to make those sort of comparisons, and maybe we'll get onto that a bit later on with other markets. But certainly a really fun role at the moment at ASX, and we're having a really exciting time.
Are there any FinTech unicorns that we should pay attention to?
Yeah, it's a great question. So 5 years ago, we had 10 tech companies that are worth $1 billion or more. And now we've got 30 worth $1 billion or more. And the ones that are probably more well known globally are Afterpay, which is in the buy now, pay later space, and Xero, the accounting software company. So they're probably two that really stand out. But since Afterpay, we've actually got another 8 buy now, pay later companies listed. So including one from the US called Sezzle, for example. We have another one here called Zip, which was actually already listed in Australia. And these are sort of $1 billion plus companies now. And so that's a really interesting space. And you've obviously seen a firm listed in the US, which is roughly the same size as Afterpay in terms of market cap at the current time.
For those who aren't quite so familiar with ASX and more specifically the Australian equity markets, can you give us a bit of context about where the company fits into everything?
Yeah, so it's an interesting market here because we've got 26 million people in the country, but actually the 4th largest pension market in the world at about $3 trillion under management. So that's about sort of 2 trillion Swiss. And basically that means that our equity market is really supported by this weight of money that really feeds equities in many ways and continues to grow over time. In terms of the makeup of the market, it's about 50% resources and financials, so sort of old economy sectors, and only about 6% technology. And we have around a similar amount in terms of healthcare as a proportion of total market cap. So that's an interesting dynamic, and one that is changing quite a bit, and something that we can touch on later on. And another really interesting feature about the Australian market is the small and mid cap support. So there are 2 reasons why listings in Australia happen generally quite early. So we have sort of $1 billion listings as well in Australia, but we also have listings that say $50 million market cap and below in some cases. And now this is partly to do with the history. So the mining companies, the mining junior explorers have been supported in the public markets for over 100 years. And so they're really the ultimate startups. And that really translates into other sectors like tech and biotech and so on. And the other reason for the early stage listings is the fact that we have such a nascent VC industry, although it is gathering critical mass now. So the main point is we've got a lot of money under management, and great support for small and mid-cap or earlier stage companies on the market.
So, James, you talked a bit about the history of the exchange funding venture into things like mining prospecting, and that's something I'm a little bit familiar with coming from Canada. There's a lot of interest now in shifting to the new economy. Can you talk a bit about why tech companies are attracted to ASX in Australia?
So the market cap of the tech sector on ASX is about $180 billion. And the market cap of the whole market is $2.7 trillion. We've got about 260 listings in the tech sector. And that has grown. We've had 100 tech listings over the past 5 years, of which about 37 have also come from overseas. So it's both the Aussie tech scene that is maturing and growing, but it's also overseas companies choosing ASX as a capital raising option.
And James, can you say a few words about how does ASX in Australia fit into the global landscape? Because, for example, there's the Toronto Stock Exchange or Toronto Markets, Toronto Montreal Exchange, and other groups around the world that are also attracting early stage companies. Why is Australia one that really stands out?
Yeah, look, it's a great question, John. And basically, there's a couple of reasons. So if we talk about competing stock exchanges for a moment, we also, of course, compete with private markets. But if we talk about public markets for a second, the US markets are great if you're sort of $10 billion IPO plus. But for a long time now, the US markets have really underserved early stage companies. So when we go to attract US companies to ASX, we go and pitch to US companies. One of the factors to consider for them is that if they're below $1 billion market cap, it's actually too onerous and actually too difficult to list in the US in most cases. If you look at Canada, Canada's interesting because it's actually got a similar economy to Australia. It's largely in resources and banks, and that reflects in the market cap of the market itself. But what we found over the last 5 years is actually Canada has not attracted anywhere near the number of tech listings that ASX has. And part of that, I think, is that it's a blessing and a curse being so close to the US, and perhaps some private money has kept those companies private longer. But I think there's a variety of factors there. The bottom line is when I go and speak to companies, the Canadian market and compare markets, the Canadian market just doesn't have the peer group of tech companies that we have. And then London, if we go over to London, you have the AIM market and obviously the main board there as well. But obviously Brexit has hit that pretty hard, that market, and IPOs have certainly dried up in many ways. We're seeing a little bit more activity over there now. But this also goes to junior markets versus main boards. So in Australia, a long time ago, we made a conscious decision not to open the junior market. We actually maintain, and we often get asked the question, we maintain just the main board, and all companies are listed on the main board under the same regulatory regime. I think certainly if you go back to the mid-2000s, AIM was very popular, but what we've observed post-financial crisis is actually investors want more comfort and more disclosure, more robust sort of regulation around listings. And so we've just kept the main board as it is. And I think from a regulatory perspective, that's helpful because it means that you're opening yourself up to all investors. You know, a lot of junior markets, fund managers cannot invest in a junior market stock before they've even looked at the stock. So that's one of the key factors versus London. And then you also go around the world and think about Singapore. Now, Singapore also doesn't have much of a tech sector, especially on the smaller side. And then Hong Kong, again, it's a great market for very large companies, the Alibabas of this world. But for small and mid caps, it's quite a challenging market in which to list.
Thanks for that, James. That's quite a comprehensive overview, and I think it really helps distinguish why this is something people should consider. Before I get into the details of exactly what you and your team do and what the process looks like, I wanted to ask one more kind of comparison or competition type of question. You hinted at the idea of private capital as well. And also, of course, from Switzerland, we're especially familiar with the idea of the ICO or initial coin offerings and token offerings. Why or how would you distinguish the idea of going to public markets, especially with you at ASX, as still a great way to go ahead compared to those other two?
I'll start with the private market side. So if I was to use a US example again, we've got around 50 US companies listed on ASX. And some of the more recent ones have been from California and also some of the other regions like Seattle. We've also had companies from Minneapolis. The reason a lot of those companies have sort of looked at ASX is because they're thinking about another private round. So if you think about it in terms of an alternative to Series C or later stage, they basically looked at what it would mean to take another round of VC money. Now, VC money is fantastic in the early stages. It's just that when you start taking the late rounds and layering on more and more terms, it can be quite attractive for founders to actually think about an ASX listing as an alternative, because you get to collapse the cap table, you go to ordinary shares, it's very transparent, and then you list, and it goes back to the old traditional reasons why you list, which are well established but are sometimes forgotten in this day of private money being everywhere, and they are typically access to capital, which is actually a lot easier once you're listed, because, for example, you can raise money on the ASX market within 24 hours, have a trading halt, place shares, and raise money in 24 hours, rather than in the private markets where you might be going for several months looking for funding. And the second reason is liquidity. Of course, you're on a public exchange, you have liquidity in your stock. And with all the benefits that comes, which is another key reason why you list versus private markets. And then visibility. So, it's really a marketing exercise in itself, listing. And so those traditional arguments still apply today, and I think are very valid in terms of versus private markets. In terms of ICOs, well, we don't actually engage in that much with companies looking at ICO versus a public market. I think that, with ICOs, it can be right for certain companies, but I think over time, if you want a stable investor register and you want to grow over time with capital support, credibility of being listed, of course, is another factor on a recognized globally recognized exchange. It's an easy argument in many ways. Yes, you can get capital very quickly today with an ICO, but what's going to happen in 3 years? And I think there's a question mark over what happens over time with that method of funding.
Yeah, that's a topic I've been involved in a lot of discussions about over the last 5 years, and it's interesting to see how it continues to evolve, but I don't want to dwell on that. I wanted to talk about moving forward. So those who are interested in learning more about the process of actually how this goes about, can you give us just a glimpse of what happens once somebody contacts your team and where it can lead to?
I think if, particularly given we've had some European listings lately in the tech sector. So, for example, from Ireland, dare I say, even from the UK and even Germany, there's been some really interesting companies come out of Europe that have listed. And typically, what we'll do is, if companies want to learn more, we'll often think about things like, what peer group is there on the ASX market? What kind of companies look like yours? And then looking at those companies, what does the valuation look like? What's the liquidity, analyst coverage, recent performance of those companies? And we're happy to share that data with you as a kind of almost like a first cut. You can speak to our team directly on that, and we can show you, how it stacks up. And then, using that sort of evidence-based approach, you can make a comparison with other capital alternatives. So that's what we would typically do. And then from there, depending on how the company looks, and we're happy to look at the company and assess whether it's suitable for the public markets, or because it might not be the right stage, or it might be there might be some structuring to think about. But ultimately, assuming it's something that would work, we can then refer to the ecosystem here, so the bankers, lawyers, and accountants that would take that deal forward.
And James, can you tell us how can people get in touch with your team if they're ready to start looking at listing or interested to learn more about going with you at ASX?
Well, John, you have my contact details, which I'm happy for you to share. And if you send the link with our details, I think that would be a great first port of call.
Great. Well, I wanted to ask a bonus question. These are interesting times, and I know COVID is one topic that has touched everybody, and I can imagine at Exchange it could have impacted your business. Are there any other topics, COVID or beyond that you're really paying attention to in your business or in your life right now that you want to share with us?
Yeah, I mean, obviously, COVID is the front of mind still. In Australia, we've coped very well with it on a sort of daily basis. We certainly have noticed it in the market, though. So at the start of last year, when COVID hit, IPOs almost completely dried up. And so all labels into the second half of the year. So we really saw quite an unusual year in the fact that 3/4 of the new listings came in the second half of last year. So, and what we're seeing now, COVID really just brought forward years of change in the way businesses and consumers use technology, of course, as we've seen all over the world. But that's really meant that a lot of this sort of tech and high growth companies are coming to market now, particularly so in the areas like e-commerce, and they're actually coming to the market in this coming year. So the impact has been quite interesting on listings, in that maybe some companies that were thinking of staying private are now actually going public in Australia earlier.
It's been a unique case there in Australia and New Zealand. I'm a bit envious and looking forward to when we can travel again, so I can finally make it down there to enjoy some nice beaches. Great. Well, that's a perfect spot for us to end it, I think. As you mentioned, we're more than happy to contact anybody who's interested in learning more about listing on the ASX. We'll be happy to share your contact info, and we'll also share the link to more information about your group and the listing process. James, thanks again for taking out the time. I know it's starting to get into the evening there, so I wish you a good evening and hope we can talk again about some interesting market developments later in the year. Thanks.
It's a pleasure, John. Thank you very much.